Hey traders, Jason from Leavitt Brothers. Hope you're doing well. So in this video, I'm going to do kind of a quick overview of what I see with the indexes, and then I'm going to cover some individual charts. Okay. Market did extremely poorly in January, fell hard, lots of volume, lots of big losers. Over the last couple of weeks, we've had a lot of upside. Okay. Some upside lacking energy, some upside with a lot of energy. You know, some stocks doing really well. Before I start, quick reminder: I'm going to be raising the price of my masterclass in 2 weeks. So if you've been on the fence thinking about taking that class, now is a time to check it out. You can go to the homepage at Leavitt Brothers, click on the link there, and get some info about it. If you're not ready for the full class, and you want to kind of get like the Cliff Notes version, I do have a free Mini Masterclass that you can check out. I'm going to put a link in the description below this video. So check that out if you've been on the fence. And you know, a lot of you have written me saying like, I'm going to take it eventually, but just not right now. Well, now is probably a good time to sign up because the price is going to be going up. All right, so let's get into this video. First, I'm going to cover the indexes. Then I'm going to cover individual stocks. Try and get a gauge of what's going on in the market. All right, so first up, here's the S&P 500 going back a little bit more than a year. You can see steady uptrend. For the most part, held above its 50, a little dip below the 50 there, dip below the 50 there, but actually did fairly well. And then we broke down in a big way in January. Fell pretty hard, posted big losses, and now the index has rallied back up. So what I interpret this as, we have an uptrend. The uptrend has been broken. A downtrend is in place. We have a resistance level here at 4,600, both in terms of price not being able to get above that level and in terms of the 50-day moving average. Could the index break out here and shoot up to 47, even 47.50? Sure, that's possible. And I should note that volume's declining here. Is that going to happen? It's possible. Certainly it's possible. Things got very, very negative down here. A lot of individual stocks have done well lately. It's certainly possible that the market could shoot up from here. The way I see this as, the uptrend is broken, a downtrend is in place. In my eyes, best case scenario is we have some wide swinging up and down movement for several months. That, in my eyes, that is the best case scenario. A lot of damage has been done. It's going to take a lot of time to fix the charts. Okay, charts are not going to just all V bottom. It's going to take some time. It's going to take some space. It's just going to take some time for the charts to fix themselves, and then form bases to be able to go back up. So again, my best case scenario is I think we just have some up and down movement. Worst case scenario is at some point in time we're going to roll over and at least test the lows. Okay, to me, that's worst case scenario. Best case, up and down movement for months and months and months to allow the market to consolidate and rest with time. Worst case is we're going back to lows, and you know, if we go down, then we're probably gonna go below them. All right, so that's the S&P. Here's the Nasdaq, similar uptrend. Obviously, it's a little bit less smooth, but we have many touches on this trend line. There, taken out there. Resistance there, fell hard. Unlike the S&P, which is up against its 50, this one is not quite there yet, so the Nasdaq is weaker than the S&P. Makes sense because the S&P has some financials and some oil stocks that have done well, whereas the Nasdaq is more tech-heavy, and tech has been hit the hardest. So same thing here. I think best case scenario is we just have some, several months of sideways movement, up and down, up and down. You got to buy dips, sell rallies. You can short rallies if that's your thing. But from a trading style standpoint, if you're waiting for charts, if you're waiting for trade setups to set up on like the daily chart, they'll probably be like half over by the time they trigger. And if you trail stops with some sort of moving average or some sort of sell signal on the daily, you're probably going to end up giving back half your gain before you get out. This is a time period where things are moving fast. We're going to have rallies. We're going to have sell-offs. Market might not pause long enough for indicators to line up, so you have to be a little bit more aggressive, selling into strength, buying a little bit into weakness, using intraday charts rather than like say just the daily charts. So best case scenario here is I just see several months of just sideways wide swinging movement. Everyone gets chopped to pieces. Everyone gets frustrated. Worst case scenario is at some point in time we just roll over and come back down to lows or lower. Okay, I don't see a scenario where the market just goes up and up and up and like the low is in and that's it. Okay, I don't think this is a case like after the virus broke out, we plunged and then we did a V bottom and we went straight up for well over a year. I don't think that's in the cards. Okay, to me, that's the least likely scenario, is that we just go up from here. Okay, I think a best case scenario from here is just some up and down movement. Okay, last one of these. This is IWM. It's for the Russell 2000. Several months of consolidation in a range, and then we got a solid breakout here, volume over here, but it turned out to be just the mother of all false breakouts. The stock immediately came back down into its range. Resistance here from the 50, resistance here from the 21, and then obviously it broke out of its range. It's done really well lately, although volume is declining. Okay, same with the others. We have a ton of overhead resistance here. A lot of people would love to get out even, a lot of damage to individual charts. They're not going to just head straight north uninterruptedly for months and months and months. Okay, could we build on this week's gains? Absolutely. Okay, we definitely could follow through in the near term, even in the intermediate term for a couple weeks, but eventually we're going to roll over. Okay, best case scenarios, we have something like this. Worst case scenarios, we eventually come back down and at least test those lows. I don't see a scenario where we just do this. Okay, I just don't see that happening. All right, so that's what I see with the indexes. I see uptrends that have been broken, downtrends are in place, lots of overhead resistance to deal with in terms of previous price action and in terms of moving averages. Market could get oversold or overbought at any time because that's just the way things are right now. Things go to extremes a lot quicker. But keep things shorter term. I don't think you could enter a swing trade thinking that you could hold for weeks and weeks and weeks. I just don't think those trades are on the table right now. All right, let me pull over my TC2000 platform and just go through a handful of individual stocks just to show you what I see. Okay, so here's Asan, and this is, to me, this is encouraging. Okay, obviously, this is a stock that we played at Leavitt Brothers on the way up here, broke down in a big way. But what I see here is I see a stock that fell from 70 all the way down to 45, and now it's back up to 70. So this, to me, is fairly encouraging. Okay, when the market corrects, if this stock could just hold up here in some sort of a range between 60 and 70, or pull back and touch a key moving average, this stock might be the one to buy when the market bottoms. Okay, the purpose of going through this is that I want to start identifying the stocks that are acting well, that sold off, suffered a big drop, no big deal, but that are starting to act well, moving up with force, with volume, because those are the ones that when the market falls again, they're probably going to hold up fairly well, hold key levels, and then they're going to do extremely well after that. Okay, Docs gapped up yesterday on earnings. Even without the gap up, we're starting to form a decent base here. Head resistance, head resistance here at around 50, a little bit in the high 40s, gapped up. So leave it alone for now. Okay, but again, like the last one, I have pretty good confidence that when the market corrects again, if this thing could just kind of drift back on light volume, even if it fills the gap, if it could just drift back on lighter volume and it becomes kind of evident that sellers aren't really in control, it's just kind of falling by its own weight because the entire market is weak, then this will be a stock to buy on a dip because it'll probably do well on the following rally. Affirm did great, then did horrible, now doing well again. So it looks like 80 was a key level over here. It's got a decent base in over here. Look at all the volume down here. So again, if on the next market correction, this stock can just kind of drift down on lighter volume, it could be one that we're buying in the low 70s, high 60s, and then riding it up to 90 or 100. Okay, it's a possibility. Right now it's showing some pretty good strength. grab as an IPO if you ignore like the initial price action, because who knows where it's going to go public and all the pre-IPO hype. So I kind of ignored the initial print. All I know, it was a weak stock trending down. Today it's gapping up. It's up almost 20%. So if today kind of jerks the stock back to life, this is a stock that if it can hold the gains, then I think we go higher from there on the next leg up. Am I going to chase it here? Not right now. But if I'm building a list for stocks that I want to buy after the next pullback, this is going to be one that's on the list. Net did extremely well, then fell apart. Now it's doing well again. It dropped from 120 all the way down to 80, now back up to 120. Look at all the black volume bars down here. So again, am I chasing it here? No, but it's somewhat encouraging that the stock is doing well right now. Okay, it's above its 8 and 21. Its 8 has crossed above its 21. It's back to a key level that it was at a month ago. It's right up against its 50. So if we get a little bit of a cup and handle pattern, this one could be one to buy in a few weeks for possibly a move from 120, up into like 150, 160. HEAR. So this one, this is one that we played at Leavitt Brothers. Big rolling pattern here, broke down support level there. Now we got a little bit of a base, and the stock has moved up, done well, gotten above its 8 and 21. We still have some resistance up here, but it's done well enough for me to believe that if we get a little bit of weakness here, then this one might be one to buy at a later date. Okay, it's encouraging that it's doing well. BLND, this is one that's currently on our list at Leavitt Brothers. While the market was completely falling apart in January, this stock was very quietly basing. Maybe it wasn't quietly basing because volume was strong here. Then it broke out. So far it's doing really well. So again, like the others, when we get a pullback, and it's going to happen at some point, this stock has it's acting well enough, and it has enough of a cushion that I could see this stock holding up and just falling by its own weight over here, drifting down on light volume, and then maybe we're buying a dip over here for a run up to 11 or 12. The trade desk, quickly, hard to trade this one because it's very volatile. It trades in like 5, 6, 7 point ranges every day, but it's done really well the last couple weeks, and it tells me that like any type of pullback here, not any type of pullback, but the stock is likely to hold up relatively well if the market falls apart. CFLT, while a lot of IPOs did this, but then they came all the way back down, tested the lows, and actually went below, CFLT actually held its gains very well. So to me, this is not easy to trade. These candles are really big, and the spread on the stock can be kind of big. I've traded this one. It's been frustrating because the spread could be like 20, 30 cents sometimes. But it's acted really well, and considering the market completely fell apart over here, and this stock moved down but didn't move down that much, and it's already boom at like a 2.5 month high, that's encouraging. Okay, if the stock drifts down, this one is probably going to be one to buy. We go through a few others here. SSYS was posted on the message board at Leavitt Brothers yesterday. You can see nice, pretty decent base here. Broke out yesterday on strong volume, adding to it today. Chewy, weaker stock, trending down, but starting to turn the corner. Got a rounded bottom here. 50 was a key level, right there. Then it broke down, but it's gotten back above the level. The 8 is above the 21. It's getting above the 50. I'm not a buyer here, but if the stock is acting better, we got volume here. If we get a little bit of a pullback during a market correction, this one could be a buy. A couple more here. I don't want this video to be too long. YMM, market fell apart during this month, and YMM basically just traded flat. We got a decent rounded bottoming pattern here. Resistance like right in through there. So that's not a bad pattern. If the market was really weak in here and this stock just held and built a base, it's the kind of stock that you could buy for a move probably up into this thinner area here. How about this one? Here's MVST, volatile stock over here in, July, August, September. Then things tightened up. Obviously, it was a weak stock trending down. Okay, but it's acted much better lately. So it broke a support level there at 7. Decent rounded bottoming pattern here. It needs some, it needs some time to rest here. Okay, but the fact that it was able to move up this much on consistent volume tells me that when the market corrects again, this stock has moderately good chance of like holding its gains. Maybe it forms a cup over here. Okay, could be a little bit deeper, but if it can hold the gains and hold some key moving averages, then this stock might be one to buy when the market legs up again. Okay, I'm going to cut this off here because I don't want it to be too long. So overall, I think longer term, looking out several months, I consider the uptrend to be broken. And I think at best the market's going to, up and down in a range. Worst case, I think we go down from here. But I'm a little bit encouraged that I'm starting to see some decent patterns on some previously healthy stocks. Okay, it's a little bit encouraging that we're actually seeing some pretty good price action. All right, that's all I have for now. Again, check out my free masterclass at the link below this video, and I'll see you next time. Thanks for listening.